Most businesses don't fail because they have a bad product. They fail because they run out of cash. And the crazy part, the same banks that tell you they're here to help your business are usually the first ones to crush your cash flow when things slow down. Imagine this, your business has one bad season. Sales drop 15%, marketing stops converting, payroll's due on Friday, your loan payment is due on Monday. Now the bank starts calling. Late fees hit, interest compounds, the pressure starts building. But what if your business financially was under your control? What if your money kept working even when your business had slow months? Today, I'm going to show you why cash flow is the real heartbeat of every single business and how the infinite banking can literally help your dollar make more. This is Nelson Pizarro with Thank You for Legacy podcast, where we teach individuals, families, and business owners strategies to take back control of their money, stop relying on banks, and create systems for generations. Make sure to follow, like, and share this podcast with somebody looking to build wealth, build a business, and build a legacy. Let's talk reality for a second. Most people start a business because they want that freedom of time, financially, freedom with their family. But what actually happens when they start their business? Most business owners end up trapped, working long hours, taking more stress, and becoming employees inside the business they created. Typical business owners fund their businesses in three ways. One, personal savings. They save up and they deploy it and start a business. Two, they do the traditional bank loans, SBA loans, which now you're on their terms. And three, they try to use credit cards or borrow money from family and friends. And here's the scary part, most businesses are undercapitalized from the start. Everybody thinks they need only 100,000, only 200,000, but in reality, they need a lot more than that. Statistically, 20% of small businesses fail within the first year. About 45% fail within 5 years, and roughly 65 don't even make it past 7 years. That means their cash flow, not the idea, is usually the killer. Most businesses are owner managed and owner operated, meaning the owner is the salesperson, manager, marketer, customer service, operations, the payroll, sometimes even the janitor. And because they wear so many hats, they never truly become the CEO. They become exhausted operators. And here's what people don't understand, profit on paper means nothing if cash flow is dying. You have customers, invoices, equipment, employees, and you still go out of business because you don't have enough cash available. To open a business, you need cash. To market, you need cash. You need to buy inventory with cash. You pay insurance with cash. You pay payroll with cash. Everything revolves around cash flow. One of the biggest mistakes business owners make is trying to do everything themselves because they think, I don't have money. Instead of asking, who can help me grow faster? This is why understanding your strengths matters so much. Are you a great communicator? Are you a leader? Are you amazing at sales? Are you a creator? What about a visionary? Because once you know your strengths, you can surround yourself with people who are strong where you are weak. Most owners stay stuck because they think hiring costs money. But the right person can create money. The right salesperson brings revenue. The right operations manager creates efficiency. The right marketing person creates the leads you need. And that's how business scales. Now let's talk about seasonal and business cycles because this is where many business gets crushed. Restaurants usually make most of their revenue during breakfast, lunch, or lunch and dinner. And those are the rushes that come in. Then they have the weekends that they do pretty well, and the holidays. And also, strong months for them are usually November and December, and summer tourism seasons depending on locations. Slow periods are commonly January, February, late summer for most areas. Coffee shops typically make majority of their money early mornings, before work or around lunchtime. And their slow periods happen to be mid-afternoons or during economic slow times when people are trying to cut back their spending. Malls and retail stores usually see major spikes during back to school season, Black Friday, Christmas shopping, holiday weekends. And then traffic slows down dramatically after the holidays. So, if massive established businesses experience ups and downs, why would your brand new business be any different? Now, let's say you go to a traditional bank, borrow 150,000 for your business. The bank tells you, here's the interest rate, here's a monthly payment, here's a repayment period over the 3 to 5 years. You sign the papers, which will take you about 3 to 6 months. You get the money, and at first, everything feels amazing. This is what I call the honeymoon stage. Family and friends support you, sales start growing, your business account has money in it, and you're making payments back on time. Everything looks perfect. But then reality hits. 1 month sales drops, let's just say 10%. Then another month they drop again. And now you start spending more money on marketing trying to fix that problem. But overhead never stops: the payroll, the rent, insurance, utilities, subscriptions, taxes, inventory. And you guessed it, the loan repayment. And what happens if you missed payments? Well, the banks don't say it's okay, we'll help you out. They literally send you a couple of warnings. Then you get late fees added. Then interest starts compounding. Your credits get impacted, and then the pressure really starts building. And not only are you trying to save the business, you're trying to survive personally. Now let's shift into a different strategy. This is where the infinite banking concept becomes super powerful. Imagine, instead of borrowing from a traditional lender, you borrow against the cash value of your policy. Now listen carefully because this can change everything for you. With traditional banks, they have the control, the timeline, the penalties, the pressure. But with policy loans, you control the repayments, you structure the timeline or the terms, you decide how aggressive you want to pay it back. And here's a powerful part: if your business slows down for 6, 12, 18, 36 months, and you cannot pay back your policy, you still keep the equipment, you still keep the tools. If you purchase vehicles, you still keep them. The marketing that you invested in, it's still producing. You have a system. You built a business that stays alive. That flexibility can literally save the business. I'm not going too deep into the mechanics today, but I can tell you this: the freedom, stress relief, the flexibility of having access to capital you control is something most business owners have never experienced. At the end of the day, every business owner must understand one thing: your business literally runs on cash flow. You need to understand when it slows down, what months are stronger, what months are weakest, how to prepare for those cycles. Most businesses fail because they don't prepare for the downs. But when you create systems and strategies around cash flow, you create stability. And when you combine that with properly structured infinite banking strategy, you now have a tool that helps you manage both the highs and the lows. If this episode touched home, DM me or leave a comment below, cash flow, and we'll set up a time to talk. Share this podcast with a business owner that's always talking about the highs and the lows of their business cash flow. Make sure to like, follow, and share the podcast. And again, this is Nelson Pizarro, Banking for Legacy podcast. And remember, your money, your bank, and your legacy. We'll see you next time.